Okay, now our next lesson deals with the similar situation that we had last time. This should look familiar. You have the same salary expense transaction journalized into the general journal, this time of the quality clothing store. This is what we had last time. Salary expense 10,000, and then you have several credits: federal income tax payable, you have state income tax payable, FICA payable, and city income tax payable. These are the deductions or the withholdings from the employee's payroll. They have to pay taxes, and we withhold them, and we will pay them to the federal government or the state government later, or the city in the case of this entry. And finally, cash is credited by 7339.50. This is the net pay that our employees will get. And this is the entry that we started with in the last time. The only difference is I've dated this March 31. And the reason is this. We will assume that we pay our employees once a month. So we have already paid them for the year of 2017 to January and February, and now we're paying them in March. So we only pay them once a month. A little unusual, but it's simplified for our purposes. So each month, our employees earn $10,000, and we have to withhold some things, and we've talked about that in the last video. And we end up paying them a net amount of $7339.50. This particular video will talk about how we take this entry and post it to the ledger. And let's take a look at the ledger at this point. Under the assets, this is at the tab at the bottom. If you notice, we tab back, we see the journal, and if you look at where I am here, you see the ledger with the assets. And the first one I'm going to show you is cash. And obviously, there are a lot more entries in cash than we are showing here, simply to make it simple for you. But we are in March, and if we started on January 1 of 2017, and we had a debit balance, as you see there, of 51,324, there would have been a number of debits and credits throughout the months. But I'm only showing you the salary expense transactions. So in January, at the end of January, we would have credited 7339.50 to cash. And in February, we would have again credited cash by 7339.50. And that's because the entry in January and February would be the same as it is in March. So cash is credited by that amount. That is the amount that we have debited, or excuse me, that's the amount that we have credited to cash. That's the amount that we have spent. So cash is reduced by that amount each month. We will do that again in this entry. If we look at liabilities, again, there would be a number of entries, probably in accounts payable, but we're not showing them here because they're not relevant to this particular lesson. But we do have some other accounts. We have federal income tax payable. And as you see, at the end of January, we would have credited $1,000. At the end of February, we would have credited $1,000 from income tax payable. Again, going back to the journal, we see that this is the entry. The similar entry would have been done in January. It would have also been done in February, and we're going to be doing it in a moment in March, excuse me. And again, federal income tax payable would be credited by 1,000. So the liabilities show federal income tax payable, and we see the credits for these 2 months. State income tax payable, another liability account, and again, going back to the previous months, in January and February, we credited $700 in each of those months because that's when we paid our employees, and that's when we made that entry. FICA tax payable, if you remember, that account deals with the deductions that we have to take from the employees in order to pay their taxes for Social Security and for Medicare. And again, in January, February, we made those two entries, again, $760.50. And if I can scroll over to the right, we have city income tax payable, same way. January and February, we had those two credits from those salary expense entries. So this is the next step. Last video I showed you that this is the salary expense entry into the journal. These are the credits, and now we actually do the posting. So salary expense would be debited by 1,000. So we would go to salary expense, and it's way over here, account 504, 331.17. And again, I told you that the expense accounts have nothing in them at the beginning of each month and at the end of each month. There's a process that we will talk about later as to why they don't have continual balances. But salary expenses would be debited by the $10,000. The journal was journal page 10. We put that in, and this is salaries expense, account number 504. If we go back down here to the tab, to the journal, and we will put in account 504 for that part of the entry. So we've debited salary expense by 10,000. This says federal income tax payable credited by 1,000. That's a liability account. I find federal income tax payable 331.17, and I credit 1,000. That's what it was, and I will put in the journal page. This is page 10, and this is again federal income tax payable, account 202. Back in the journal, I put in the reference column account 202. And you see how this is going to happen. $700 is going to state income tax payable. Again, a liability. 331.17. $700. Now, in some companies, this will vary from month to month, but for ours, it's the same every month. Journal page 10. Back to the journal, which is page 10. And whoops, I didn't double check this. State income tax payable was account 203. So back into the journal, account 203. FICA tax payable, $760.50. And again, in the liability section, the date, the amount credited, and the journal is J10. And this is liability account 204. So back in the journal, I put in the reference column 204. And finally, city income tax is another liability for 200. I need to credit that in the liability section. So I find the city income tax, 331.17. And again, 200 was the amount. Journal page was J10. And I will go back to the journal and put in account number 205 for that. And finally, after I credit all those liability accounts, which I'm withholding from the paychecks from the employees, I will actually pay them some cash. That's their net pay. So I will go to cash now. Cash is an asset, and I will find cash and put 331.17. And for this amount, again, 950 is the credit that I actually pay them. And again, that is journal page 10. And cash back in the journal, I put in the reference column, is 101. So that's the actually actually the journal entry, and that's the posting to the ledger. So there are obviously a lot of other entries in the company during those 3 months, but these are the ones that we're concerned with. So each time, if I pay them monthly, at the end of every month, I would debit salary expense by the amount. In this case, it's 10,000 every month, and that means the liabilities are the same, and the cash credit is the same every month for those accounts. So we will be practicing this a little bit more, and there's another step to all of this as we go through, because all these liabilities accounts eventually have to be paid, because we have only paid the net pay to the employees. So eventually we're going to have to pay to the government or to the state uh, these amounts of money that we see in our liability accounts. So we'll look at that in our next lesson.